Alright guys, today I'm going to show you how to get funded in 2025. This is the simplest trading strategy that I've ever seen, and I guarantee that you will become consistently profitable if you start trading this strategy. Let's just jump straight in. If you don't understand this first thing that I'm about to tell you, there's literally no way that you can become profitable within the markets. So looking up right here at the indicators tab at the top of your screen, you want to apply the 50, the 100 and the 200 EMA. This is the one by Dr. Sweets. So add that to your chart and you can see they're displayed right here. What you can see guys is the 50, the 100 and the 200 exponential moving average. The 50 is greater than the 100, which is greater than the 200. That indicates to us that we are long bias on this market. So many traders make the mistake of trading counter trend or going against the higher time frame momentum. So just using a simple framework like this will make you profitable. So I'm just going to remove the EMAs, but please keep in the back of your mind that we are long bias on this market. Next, let's add our session-based indicator. You can see this automatically plots the sessions on the charts. So this right here is the Asian session accumulation, and from a New York perspective, that is from 7 p.m. up until 12 o'clock midnight. You can see right here the Asia session has accumulated overnight. And we understand that liquidity is being built up below the Asia low and above the Asia high. But because we are long bias on the market, we need to see a run of sell side liquidity. And we understand that sell side liquidity is resting below the Asia low. Therefore, what we want to see price do is run the sell side liquidity, manipulating traders. And listen closely guys, this is super important. What this move will do right here will entice traders thinking that this is a breakout, thinking that the market is going to go lower. But no, what this is literally doing is just providing liquidity and fuel in order to move the markets in the intended direction, which is a long trade to the upside. Because remember, higher time frame momentum and our directional bias is to be looking for longs on this market. Okay, good job. So now what we need to do is understand liquidity. Okay guys, great job. So now what we need to wait for is the London session. So this is from 3 a.m. until 5 a.m. UTC-5 New York time. And you can see right here, we've ran the liquidity to the downside. And remember, our directional bias is still long on this market. So all we're simply waiting for is a bullish confirmation during the London session. You can see we do get that right here. And therefore, what we can do, and this is super important, we can place a buy stop above the candle high with invalidation below the liquidity sweep, and if we are triggered in, we can then simply target a 1 to 2 risk to reward. Let's see if we're triggered in, guys. So, ask yourself, were we triggered in right here? You tell me, were we triggered in? Okay, good. The answer should have been no. Okay, you can see we then pushed lower, breaking the candle low, and now we're just simply sitting on our hands and waiting still for a bullish confirmation to indicate buyers are present within the market. So we're still waiting patiently, guys, and this is really important. Just understand this for a moment. So this is 2 hours of price. We haven't yet got an entry, but you have to be incredibly patient. You're not going to get an entry every single session, and even when you don't get an entry presenting itself, you still need to be patient. You still need to trade your rules and your plan and make sure that you're still being consistent and disciplined within the markets. But now you can see we do get the bullish confirmation, so we can enter on the break of this candle high and invalidation below the low. And remember guys, this market owes us nothing. We might not get triggered in this trade, but we might. And if we do, we need to be prepared and act accordingly. So if we are triggered, we're going to simply target a 1 to 2 risk to reward. And this is a mechanical risk to reward. The reason most traders fail is because you don't have a mechanical system. You don't have a risk to reward that is fixed and repeatable. So let's see if we're triggered in right here. So we're triggered in right here during the London session kill zone. So now either there's 2 outcomes of this trade. Either we're stopped out at a negative 1R, or we make 2R on this trade. There's no micromanaging, there's no in between. It's literally either profit or stop loss. And let's see how this trade plays out. So you can see we're in this trade, and during the pre-New York session, this trade hits take profit for a 1 to 2 risk to reward. And you can see we've started to reject this area, which indicates that this is a very good area to actually start taking a lot of your profit off the table. Okay, and let's just zoom out and actually understand really what's just gone on there, okay? We've swept the Asian session liquidity, the sell stops that were resting below the Asia session. We then confirmed during a kill zone, and we took part during the distribution phase in price. And let's look at this from a macro perspective. Like, we understand that there's buy side liquidity on the macro time frame up at these highs right here. But when we enter this position based off the 15-minute time frame, we don't know if we're going to actually make it up here. And to be honest, we shouldn't even really care. What I care about is literally taking a repeatable 1 to 2 risk to reward out of the market every single time. And there will be some trades where this trade will go up to the highs right here at like a 1 to 7 risk to reward. Yeah, 1 to 7. But there's also going to be a lot of times where that doesn't happen. And our job is to literally execute with a optimal risk to reward. And luckily for you, I've done all this hard back testing for you, and I've done all of this through pain and suffering. And the optimal risk to reward is literally 1 to 2. So that in itself will save you hours and hours and hours of back testing. So what you have to ask yourself, how would you feel if you were trading a 100K FTMO account? You risked $1,000 on this trade right here. If you lost the trade, you would have lost $1,000. But if you had won this trade like this one right here, you would have made $2,000. And this is the exact strategy that all of our exclusive members trade. And it's helped hundreds of people not only become consistently profitable, but also get funded within the markets with the likes of FTMO, Alpha Capital, so many different prop firms. So if you haven't already, guys, then make sure to join the free Discord. The link is in the description down below for free analysis for trades just like this one. And there's even a free course within there that explains this strategy. I personally look forward to seeing you on the inside, so make sure to check it out. Take care, guys. Bye-bye.